Hey traders, Raghee here. Let's get a quick audio and video check-in, gang. Happy Monday. Great to see everyone. All right, so we've got our futures room rocking, and we've got our live stream rocking. All right, great to see everybody. Most excellent. All right, so let's get to it, gang. We've got let's go take a look at our daily time frames. We're going to get right into it. Gang, this is our live stream. So that means we're going to be doing some active analysis and doing some day trading here this morning. So great to see everyone. Great to see everyone. G Money, take us from rags to riches. I like it. I like it. All right, so let's get to it. We're going to go right down the list here. I'm going to go ahead and get this, the notes here. So every morning that I'm on the mic with you all, we do our notes, which is where we can see the ongoing conversation and any of the setups. So these are our Monday session. Raghee notes. Okay, off they go. I included a video. You know what? I'll go ahead and share this with the live stream here. There you go. There are the notes. Okay. All right. So what we have here is, by the way, I was watching, so I'm crunching all sorts of numbers, looking at charts, because Trish and I are right back into webinar and class creation mode. We're going to have a class in June. Been running the numbers, looking at the kind of things that we want to teach in this upcoming class. And I did that all weekend, and I like to have a little bit of white noise in the background. So, of course, Last Dance, the Jordan series, is by far my favorite, just to sort of keep up in the background while I'm working. But I got a little sick of it. That thing must have cycled through, 8 dozen times at this point here in my office. So I switched on over to Becoming Warren Buffett, which is a documentary that HBO did. Really, really good. Trader or investor, you will get a lot from it. And also Belichick and Saban. That was another thing that HBO did, where the two coaches sat down, and I loved that. I'm a long time pre-Belichick New England Patriots fan. And Saban coached the Dolphins here for, I think, a season or two before he went on to Alabama. But anyway, watching that, and there was a great 90-second clip. And those of you that know, one of my favorite books to recommend to traders is one called The Mental Keys to Hitting by H.A. Dorfman. And if you're a baseball fan, you're going to like the book. If you're a trading, investing, and baseball fan, you're going to find the analogy is fantastic. And Warren Buffett, who's a huge Ted Williams fan, talks about Ted Williams' Science of Hitting book, which is also very, very good, and discusses how Ted Williams broke the strike zone into 72 or 77 pieces and knew what his batting average would be depending on what he saw in that breakdown. That's us, gang. That's trading. Check out that later on. It's amazing. It's a really, really good clip. I sent it to you guys via an alert last night in the futures room and in the sector secrets room, because it's just that amazing. It's just that amazing. 90 seconds, you think, oh, that's the mindset. All right, so gaps. I don't look at today as a gap. It might be minorly opening higher than the close, but we are not opening higher than the high on the S&P. So I will not look at the S&P as a gap. NAS clearly is not a gap. It's an inside day. NAS continues to be a laggard here, gang. Again, somehow or other, whatever you need to do to disconnect from the preoccupation of tech and connect to the Dow, which is a long that we built courtesy of Treasury Secretary Janet Yellen. Come on back, Janet. Everyone was dogging you. You gave us the best opportunities of last week with your comments. Come on back and say it again. But what do we do when the market pulled back? Buy tech, please. We focused on the Dow, right? So Dow does have a gap. We may see a bit of a fade. So heads up, maybe on a gap fade in the Dow. And if that means we get a V-score low potentially, that would be fantastic. I'm not holding my breath, but if we get a V-score low pullback on the Dow, I am right as rain about that. Okay? Because again, the gap open sometimes gets momentum traders playing a break of the first 1 to 5 minutes of the morning after the bell to the short side. Finally, the Russell. Gang, as of last week, and I mentioned I was going to do this. First of all, there is some, again, talk about preoccupations. A lot of traders are expecting the Russell to play catch up, and there's a lot of bullishness, this pent up optimistic bullishness in the Russell. I think it's completely misplaced. If you want something to buy pullbacks on or get long, let it be the Dow, right? Let it be the Dow. And I have officially removed the Russell from my day trading 1 minute charts and 5 minute charts. And I've got the Australian dollar and the yen in its place. So I'm not tracking the Russell. When I look back and I break, and some of you guys might know this, and this is, Trish and I are working on the class right now. So I'm doing all the breakdowns of my day trading for this year, because frankly, who gives a rip about 2020? I'm not going to sit around talking about 2020 to you guys, right? It was a completely different time. So we broke down 2021 trades. And I noticed when I broke all this stuff down that and look, it's really important for me to say this stuff to folks, which is my win rate for the Russell is nowhere near as good as my win rate for Dow, S&P, NAS, Australian dollar, crude oil, and even some of the heavily weighted sectors. So I think some traders have a great pulse on the Russell. I just find I'm much more productive elsewhere, and that's where I'm going to focus. I hope that makes sense. And I think it's okay for someone on this side of the mic to say there's certain parts of the market I just don't like. But let me explain why. Why do I not like the Russell, and why am I not going to trade it intraday? Because Russell composition, sector level and stock level, is nothing like the S&P, the NASDAQ, and the Dow, who share a lot more in common because of the weighting of stocks and sectors. Okay? The Russell does not. It's a completely different thing. And because of that, it behaves in a way that is disconnected from the other three. All right? It's just disconnected. So the other thing is, even if I loved trading Russell, right? Even if I loved it, it's still going to be a distraction in many ways, because you have to have a separate mindset for Russell trades as opposed to Dow, S&P, NASDAQ, crude oil, yen, Australian dollar, even the VIX. They're all connected. So the disconnection and the difference in terms of what the Russell presents is really the bigger problem. Not necessarily whether or not you like it or not, but do you have the bandwidth to be sort of, distracted by a market that can do things very, very differently than the other three indices? Okay. I'm going to be straight up with you guys. Yeah, I'm going to start to steer away. Now, end of day, I don't mind trading Russell. Here's what's funny. End of day Russell, I actually do pretty well on. Intraday, I'm actually increasingly finding it to be quite a distraction. Okay. So let's get to work. What do we have going on in terms of our first couple of pitches this morning? Right away, look at the NAS. Holy cow. The NAS just put on a full Charlie Brown and Lucy and just sunk from right around 13,650 to darn near 13,600 even. The S&P is going to move in sympathy, somewhat in sympathy with that. Now, wow, that's some move on the NQ there. Give me 1 second, gang. Oh, it'd be nice if I went to an intraday chart. There we go. All right, so we're getting a swift move to the downside in the NAS, heading down towards 13,600 even. Notice we have not quite touched the V score. We've gotten very close though. We're super, super close. There's a lot of proximity, but we haven't quite touched that V score low. And that means that we probably may see slightly lower lows than 13,600, which we have. And that means the S&P. By the way, if I'm going to buy one of these today, I'm probably going to lean towards the S&P. They're both heading down lower. Why would I like the S&P today? If I'm going to fade, let's get this going on the notes here. If I am going to V-score fade by an index this morning, I am favoring the S&P because the Dow is strong. As a YM, the Dow is strong relative to the NAS. All right, so although, okay, let's take a look, because right now it's very tempting to buy some Qs here, gang. It's really tempting to look at some Qs though. So I may not want to buy NQ. We could go with micro. 933. I mean, the market's been open for 3 minutes. Okay. I'm looking at potentially an HPMR, V-score, an HPMR buy in NQ, which for me is going to be a QQQ call. I might look at some QQQ calls here. That might be something to look at, maybe. All right. Again, if I'm going to fade anything, it's a little bit more. I'm a little bit more interested in the S&P, and I will even go SPY on that. But here we are looking at HPMR, super close to the V-score reading, and yeah, I might look at the. Well, let's go take a look at what I mean by the QQQ. So let's get to work here. So I'm going to pull up the QQQ. We're going to go with the ETF, May 10. I'll also look at the SPY. QQQ. And what I'm looking at is a long in the HPMR. Now, we've gone double red in QQQ. Or sorry, in NQ. So definitely be cautious here. I like the ES a little bit better. We are double red. So let me make a note of that. With double red on the JT multi. That's our market structure color-coded reading there. You can see the bottom two color bands at the bottom. Yeah, but I am looking at the QQQ. This will be the 330 calls. I'm going to eyeball those 330 calls. All right. My trigger, this is where we are a little bit different. We're not just going to buy them. We're waiting for a specific trigger. I like that 13,560, 13,555 zone. That area is fine with me. The zone is going to extend all the way down, though, to probably 550. All right, so really 550 to 560 is a fine zone. Bearishness. Be cautious. It's double red. Be very cautious. It's double red. Okay, so why am I going with the options here? One, I think the markets are more likely to bounce than not from a zone where I have volatility and volume exhaustion. But the double red means that the HPMR, my hourly price movement range, volatility zone support may not hold as well as I'd like it to, so I can add a little bit more elasticity, flexibility to my trade and control risk with the calls. Right now, these things are trading 145 by 140. 145 by 140. I'm sorry, 145 by 154. and they're going off at 145. Okay, just to give you some reference there. But all right, you might say, Rog, it's double red. It still looks really, really weak. I may want to wait. Tell me more about this S&P. Okay, let's take a look. So the other alternative I have, and you can do them both, is to take a look at the SPY. Let's take a look at our ES here. These are very aggro. Take a look at the notes, gang. I outlined that anything we do before 10 o'clock is aggressive. We're still establishing the volatility range during these first 30 minutes. It's going to be more volatile. Okay, but let's see if we can't scoop up some of these SPYs. What am I going to be looking for? 421s, gang, 421s or 420s. But 421s are fine. You're going to scoop up that May 10 SPY 421 call with the trigger being, I think, the 42.20 and 3/4, 42.21 is perfectly fine. So 42.20 and 3/4 is the value area low right now. Very close to a V-score low reading. NAS is weak. S&P ends up being a better choice because the Dow is strong. Some of you might say, Rog, I've seen this before. Thanks, but no thanks. On the NAS, I like the idea of the S&P. No problem. No problem. So that's why I give you guys the choice. You can do a little bit of both. You do a little bit of both. But right now, I favor that S&P because, again, as long as the Dow is strong and NAS is weak, if I'm looking to buy anything on a pullback, it's going to be better suited in the S&P. All right, I have a little bit of both, but I have twice as many SPY calls as I do QQQ. All right, so right now I bought both. Scooping those up. Okay, so that's what we've got so far. That's what we've got so far. All right, so next up, so it's close, right? It's closing in. It's pretty close there. As it gets closer and closer to those lows, I'm not playing bearish momentum. I'm looking at that being an inflection point, quite frankly. I'm going to switch on over to something you guys are not used to me doing, but I do quite a bit of here in my office, and that is play currencies. I'm going to look for an inside candle after that boom, boom, move in 6A. I'm going to look for a small squat-bodied candle, and I will be looking at 6A or FXA, but I need to see this sell-off sort of chill out because the large candle does require for me a minor low or an inside candle before I'll go ahead and step in. But it looks like an interesting zone here between 78.78 and 78.65. So just call it 78.78 and 78.65. We're getting a V-score low. Between 78.78 and 78.75. Waiting for an inside candle or minor low. That could be interesting. That could be interesting. So I'll keep that on that's on a setup, but I would like to take this with FXA because that would help me manage the risk of what I still see as a quite risky entry. We haven't chilled out yet. I need this candle, the one that we're looking at right now, to show me that we're going to catch a bid. The problem for me with the FXA is that, let's say I'm looking at the 78 strike. There's very few open interest and no volume. So FXA, May 21, these are 55 by 60 cent options, but there's very little liquidity. So FXA sadly has very little liquidity. Okay. All right. Anything I do before 10 o'clock is aggro. I would recommend most traders sit on the sidelines through this part of the morning. I think most traders are going to be much better off sitting on the sidelines for the first 30 minutes, especially if you're not accustomed to the volatility, especially if you're not. And what do I mean by volatility, gang? So one of the touchstones of my trading, and something that's unique to what I do, is understanding hourly and daily and expected price movement ranges. This is historical volatility, gang. There's no other tool that does this. This is not ATR. There's no other tool that does this. And, you know, I count myself very lucky to essentially be the first trader to even lay eyes on this from AutoChartist. Again, there's nothing that does what this does. And so these guys came out with this. They first called it Power Stats. And I think it's about a decade ago that they came out with this, and they had it in the Forex markets. And then I basically, nagged my two dear friends over there, Eric and Alan, to bring in ETFs and stocks and everything else. And, you know, over time they did. This data reminds us that between 9 and 10 o'clock, 9:30 to 10 being the most volatile part of it, we are typically going to put in a set number of points. On the low end, just below 12, on average 16, and on the upper end, about 21. So during this 30 minutes is when we're putting in most of this range. All right, let's go back on over the S&P. If we start trading very aggressively during this window and we forget that the markets are in just this volatility expansion time, we're going to get run over while the HPMRs are just haven't matured yet. That's why we have to expect lower lows, or we have to expect higher highs during this time. And that's where I need to enter, knowing that that 42.20 and 3/4 may not ultimately hold the S&P, not because the support isn't any good, but we're in the mosh pit of the morning. And not all traders really should be trading the mosh pit. Okay, so after 10, I'll probably look at micros and minis. But right now, micros or options are the way to go to account for this very known volatility part of the morning. Okay. All right. So what else do we have here? So my V-score, by the way, is this cyan colored line at the bottom. This is the V-score down in here. All right. I look at the lowest point between 7 and 9:30, and that's what this is right there. So what's the lowest reading the V-score has given me since 7 and 9:30, and that's what I'm looking at for support when I talk about a V-score low and potential support. That's what we're talking about there. So let's see what else we have here. So NAS and S&P, I have a nice low cost options purchase. I'm waiting to see if we get anything else that I can do. The first two pitches of the morning are going to be relegated to volume and volatility, which is all that I'm looking at. So the first 30 minutes where a lot of traders get extremely active, just remember, gang, you have an incomplete amount of data. And yet you know simultaneously what it could do, what it's likely to do during this time in the morning. And that's why it makes sense to be patient during this time of the morning. That's what makes sense. This goes right back to historical volatility. Okay, so the one market that I was looking at, hoping for a momentum fade, was the Dow, and definitely didn't get that, which, by the way, suits me just fine, because the long position that we built last week on Janet Yellen was the DIA. I talked about this in Charts and Coffee. I don't care about what the Russell's doing. I don't really care about what tech is doing. When I get pullbacks in the Dow, that's an easy yes. That is a very, very, very easy yes. All right. So again, I've shifted away, although I do have some exposure. I've shifted away from tech mostly. And last week when we had pullbacks, when we did start getting, when I say mostly, what do we do in tech? Started looking at XLC. XLK is interesting, but Apple and Microsoft still can't get out of their own way. But what's strong, like Bull, IYT, XLI, DIA, not DIS, DIA, right? So yeah, these aren't the markets that a lot of people think about first. But again, ask yourself, are you just sort of unconsciously following this program of, I got to look at what FANG stocks are doing? I mean, really, who cares? Or are you following this unconscious programming of whatever's going on in the conversations on television? Or are you looking for relative outperformance? And this goes to intraday and this goes to end of day, gang. I think a lot of day traders may benefit from taking a little bit more time to look at daily timeframes when they're designing their watch list for the morning on short-term timeframes. So yeah, does a daily timeframe influence what I will do, what I'm willing to do on a 5 and 1 minute chart? 1,000%. Okay, 1,000%. Relative outperforming, gang, what have we been in? Those of you that are in both the futures room and sector secrets know XLF, financials, XLE, energy, right? That's what we're looking at mostly. That's where our focus has been. Okay, moving on back to our Dow. So my Dow is going to likely be a breach retreat conversation. I haven't hit a V-score low. I have not hit the HPMR zone, which is this blocky area to the bottom there. This data and this process comes straight from something that I created using simple arithmetic and the auto chartist historical volatility data. Okay. Again, I mention this because this is going to be sort of foreign to a lot of traders because there's nothing else that does what auto chartist does. There's nothing else out there that's going to look at this kind of data. And there's no other process that does what the HPMRs do. This is a tremendous edge for traders who are trying to understand historical volatility within the context of their day trading. So I get pretty stoked about talking about things that, no one else is looking at. And, it's still very much unknown. That gives us a really cool edge, gang. That's simple. Same thing with the V-score. V-score gives us a very cool edge because most traders and investors are looking purely at price. They're looking at the tip of the iceberg. They haven't stuck their head underwater to look at all the other mass that's sitting underneath the tip of the iceberg, which is time, volume, and volatility, right? So if you're looking for an edge and you feel like your trading is right there, but you're sort of missing some opportunities, usually what I find is additional volume and volatility and time analysis will help you turn the corner. All right, so yeah, so by the way, what am I doing with those options? I'm just sitting in them with a minimum 15% premium paid tolerance to 25% and no more than 5% of my overall account. So we work the percentages here. I worked fixed ratios. I work the percentages. We avoid risk of ruin by respecting the dollar amount that is non-negotiable as far as potential downside risk to my overall account. All right. So again, I have another 9 minutes to wait for the remainder of the day trading pitches that I'll keep an eye on. The first two I'm looking for, we got the V-score and HPMR kind of on the NQ, but let me go back to the NQ and remind everybody, when we are double red, let's talk about this here, gang, because this is really important. Do I love my HPMR? Gosh, gang, of course I do. I created it. Love that. But see this? That's my problem. It doesn't mean that this isn't good. It just means it's likely not going to hold because of how bearish the market structure via the 8, 13, 21, and 34 EMAs are. Doesn't mean that I want to short. It just means I need to be a little bit more patient and factor in the expectation that the HPMRs may not hold. They might have some good gravitational pull. That I hope they do, that I'm expecting them to do. But I do want to keep in mind that I really haven't nailed the V-score, but we're very close to it, which is more of a buy zone than a short zone. And I really need to expect lower lows. It's just that simple. So by buying the options, if I were in the NQ and taking this kind of back and forth, it's probably not that tolerable. With the micros, it's a little bit more tolerable. With the Qs, it's hardly noticeable. With the Qs, it's not even, you know, there's no trauma here in any way. I paid $145 for those Qs. I paid $145 for those Qs. That's the 3:30 call. They're sitting at $128. I can live with that. I'm not happy about it, but it's definitely an affordable amount of risk. And that's if I want to trade this early part of the day. So in 7 minutes, we'll have the clearing range set. We'll be going into our first sort of volatility time of the morning, which is 10:05. And I know the Q, I'm looking at the ugliest part of my book. I think the ES is a far better look at being able to benefit from the strength in the Dow. But what am I going to be expecting on the Dow? We are knocking on the door of a breach, gang. So we don't have it yet. However, the YM, that's the Dow, whether that be YM, whether that be the micro, whether that be the DIA, okay, is setting up a breach, retreat. Just waiting on the breach, just waiting on 10 a.m. and breach. So, you know, I'm kind of thinking ahead. I'm thinking a few moves ahead. And I also want to track, well, what's the range right now? What is the range right now on the Dow? It's 130 points. Is that high? Is that average? Is that low? Again, let's go back and take a look at some historical volatility. And the survey says 130, right? Remember the number right now, although we still have 6 more minutes to go. 130 puts us in here, right? Average is about 145, 150. Upper end is about 180. So yeah, this is a pretty average. It's a pretty average open. Historically speaking, it's a pretty average open. Cool. I like average. We like average. We like expected. We like what normal operating temperature looks like. So this is not low at all. Right? It's not low at all. And it's not too high, which could be exhaustive. It's just right. It's baby bear. Okay. So a pullback after the breach will look really good. Now, how do I know what that is? Well, we have our handy dandy little tool here, gauging the high, gauging the low automatically for us, giving us our nice Fibonacci zone of support if we breach. And I know that the breach happens through 34,928. Now, when it's 10 o'clock, whatever that number ultimately is, that's the number that we'll be looking for. But right now, I can see that that's where the long entry would be, which is taking out the high of the morning. That's not the buy, by the way. That's not the buy. We're looking at after that number is broken, we trade higher through it, we're looking for the market to pull back. Okay. And I'll be looking for the same thing on the S&P, but my feeling, because of the NAS being as weak as it is right now, the S&P is probably not going to be more of a breach setup, probably a V-score or HPMR setup, maybe a 1, 2, 3 intraday reversal pattern through the wave, things like that. But my Dow should be potentially a breach retreat. S&P will likely not be, although who the heck knows, but it's probably not going to be. Okay, let's see here. Crude oil is kind of interesting, and I would trade crude oil via my mini, which is half the size futures, or the USO ETF. Crude oil, by the way, gang, crude oil, by the way, the 6A never did give me my setup. Crude oil right now, though, is V-score plus HPMR zone. Crude oil is. All right, so at 957, we have an HPMR. Let's V-score. Buy in crude oil. It could be CL, QM, or the USO ETF. And so what you would do is, let's say look at the USO. As we sink down to say 64.80, 64.70, that area in that range, what you're doing is you're taking a look at the May 14. Did I do May 10 up here? I did do May 10. We could have done May 14 here too. Yeah, I did May 10 on the Qs and SPYs. We could have done the 14th, but we have to do the 14th on USO, and that would be the 44 or 44 and a half. 6 of one, half dozen the other. 44 or 44 and a half. May 14th call. On CL, you can do the QM or the CL futures. You can do CL options, but you can also go the 44 or 44 and a half. 44 and a half, by the way, gang, 44 and a half call is trading right now 68 by 71 cents. So you can see where we are risk-wise. You can see where we are cost-wise. It's very affordable. And as you learn to put on this kind of trade, eventually, if I buy CL, I'm not going to buy one CL. I'm going to be buying anywhere from 2 to 6 of them, right? But that's not where most of you should or will start. I think a great place to start would be the options, USO, or the QM, which is half the margin requirement and half the point movement. It's a good way to start off with a more affordable, more forgiving position size. And again, position size is one of the easiest ways to control risk. Far too many traders figure that controlling risk is moving their stop to some fake risk-reward ratio. I've told many traders that throughout the history of my career, I'm usually at a 2-to-1 risk-reward because support and resistance dictate risk-reward. Not some fake, well, I'm going to make 40 points and risk 10. What does that have to do with anything? What does that have to do with volatility? What does that have to do with time? Right? So what we do is we realize that the easiest way to control risk is not some fake moving the stop loss around, which is, by the way, what 80+% of traders do. We also know most of those traders are chronic losers. So why would I want to do anything like them? Yeah, I'm going to give it to you real today. What I want to ask myself is, what does a market typically move? Respect that, right? A 20-pound dog is a whole lot different than a 120-pound dog. They need different yards too. All right, so I respect the size of the dog and the potential bite. I look at the validity of the trade and realize that controlling risk is position size and entering with proximity to that validity of the trade, that point of validity. All right, so we're coming into the 10-10.05. NAS is still pretty ugly. Again, for most of you, if you guys have been following me for any length of time, you have a very small position in the NQ, if at all. You have some SBY, if at all, or you've waited for 10 o'clock. It's here now, and you're looking at opportunities in a potential breach retreat scenario. The NAS is going to breach to the downside, gang, and I'm not close-minded to a potential short, but I really just don't care to bother to trouble myself with trading the NAS. But it is a short. So if you've done your VWAP anchor, you know that we're anchoring this thing to the, hang on here. We're anchoring our VWAP to the 30th. Now, and we're trading below both the 10-day, and we're also going to re-anchor our monthly VWAP to May now. And we're trading both. Right now, the NAS is trading below both the rolling 10 and the first of the month anchor. That's bearish, gang. That's bearish. Once we crossed that zone between 13,666 and 13,612, that's that zone. Breaking that zone, that trips us into bearishness. That trips us into bearishness. So, you know, again, for all those reasons that I teach you guys, the NAS is probably not the best place to look, right? What about the S&P? Let's jump on over to the S&P. For the long trade, S&P, above both those levels. S&P looks a whole lot more like the Dow, doesn't it? Longs on the S&P make more sense than longs on the NAS. If anything, like I said, the NAS could be a short, but I'm not really interested in building a short book, either intraday or end of day, quite frankly. But that said, have a process. Okay, that's what I'm giving you guys full transparency on. Have a process. S&P, that buy is fine. Like I said, the reason I have more SPY than QQQ is pretty simple. The structure's better. The Dow, give me the breach already. Give me a breach. Let's get a retreat. And, you know, one of the challenges is if we breach right at 10 o'clock, right at 10. If we breach right at 10, you'll oftentimes not see a trigger form. And that's just one of the quirks of this indicator. I'm sure we can fix that. But if we breach right with the 10 o'clock candle, we won't get that little line that tells us we breach. Although clearly we can see the wick of that candle exceeded the high of the 9:30 to 10 o'clock range. So we can look at this zone for a retreat. We can look at it. All right. So for those of you that are wondering, when do I cut my QQQs loose? Really simple, gang. That's what I'm willing to risk on those QQQs, 36 cents. 36 cents. All right. 36, whatever that was, if you want to round up to 37, but yeah, 36 cents. So when those QQQs are trading $1.10, $1.09, I can cut them loose and focus on the SPY and whatever else the market's going to give me. So right around $1. If because it's $1.45, I might be willing to risk 50% of the premium paid. I might be willing to risk that much in terms of premium paid, but I'm not really much more. You know, if we fall below $1, I might give it a little bit of time. But I think for most of you, if you want to cut those loose, cut them loose. Yeah, cut them loose. My tolerance is going to be, again, the warning track comes it down to 15% of premium paid, and I'll usually cut them loose at 25. I'd rather take a paper cut, gang, than lose a finger. And I think a lot of traders, they're lucky they have fingers. Take a paper cut. We can always re-enter. Take a paper cut. Nothing wrong with that. That's why we entered with the tool that we used, right? It's $36 per option. Take the paper cut. All right, so back on over to the Dow. Again, for all intents and purposes, we breached. And with that breach comes a retreat setup. Let's go ahead and build that trade out. All right, so this would be a day trade. And by the way, these were day trade buys too, if I haven't made that abundantly clear. These are just day trades, gang. I'm not talking about any swings. If I have a swing trade, I will let you guys know it's a swing, daily time frame, et cetera, et cetera. So now let's take a look at a day trade buy. Now this is going to be the June Dow, which is your YMM1 or 21, whatever it is, contract. Some platforms just have you do 1 for 2021. Some will have you do 21 for 2021. All right. So I'm focused on the Dow. That's a relative outperformer, by the way, gang. Nice 34,880 aggro trigger. So my aggro is going to be a 34,880 limit buy. That's your aggro. Why do I give these cute little nicknames? To remind you that should be your smallest position. I'm going to put the moderate down here at the value area low at 34,850. I like that a lot. Another limit buy. Notice we are not using market orders. No market orders allowed. My conservative, just set it and forget it, gang. My conservative is kind of nice. I've got the 34,800 and I've got the HPMR sitting right there. Problem though is this zone makes my buy valid all the way down to 62. That could be a problem. So what I'm going to do is I'm going to put a stop loss on this particular trade at 34,790. We're going to set up another trade though. I'm going to set up a separate trade. This is also a day trade buy of the June Dow. Okay. This is going to be an HPMR buy. The strategy difference between this one, which is a breach retreat, it's an HPMR, and this is the aggro is 34,803. Now, where the breach retreat ends, basically the HPMR essentially begins. And by the way, gang, one trade has absolutely zilch to do with the other. Okay, think of them as two independent things going on. Don't start mixing them up. They're two independent things with two independent validities of the trade. My conservative is going to go all the way down to 34,763. You can even make it 65 if you'd like. My stop loss, by the way, 34,745. First target. On that one, I'll just take this up to 34,897. Notice every single part of this trade is a conditional order. Okay? Every single part of this trade. No market orders. Okay, oops, don't want to do that. There we go. No market orders. Right? So that's the plan right now. And, you know, another thing I want you guys to notice is this will take some time to develop. We have the luxury of time here, unlike some of the things in the morning. So what I'll do is I'll send these two out as alerts. So if, let's say, you're in and out of the chat room, or, you know, you're just trying to get a feel, this gives you the luxury of time. It gives you some shelf life before it triggers. I'm not telling you to get in now. Now orders are for folks that are in the room. We're all together. We're discussing this live. You see my notes in the margin here. These are trades that give you some time to think about the fill. It's just that simple. Okay. So this is essentially alert worthy. Some things are not going to be realistic for an alert. Okay. Some things are just not going to be realistic for an alert in terms of timing. If I don't give you enough time to determine your risk, especially on the future side, you could get hurt very quickly. When you're playing the options with me, your quick math is what's a quarter of the value of what I just bought? That's my risk. And you can do that very quickly. You should have written on your desk all your pain thresholds on a sticky note. Where are all your percentages and pain thresholds? And if it doesn't fit, right, you don't take the trade. Fit is affordability. And affordability is not one size fits all any more than risk is. All right. So let's see if the Dow comes back to us. It may or may not. By the way, if you're in the futures room or if you were in the sector secrets last Wednesday when I sent out the alerts, you're already long the DIA. Remember, we bought those DIA options. So this is where when folks say, well, Rog, how do you trend trade? How do you buy the dip? How do you do that? You guys got that up close and personal last week. All right. We love those kind of trades. Again, thank you, Janet Yellen. And I'm trying to find where that order was. Yeah, we bought the June 18 DIA 335 calls. June 18, 335 calls. Scaled out at the first target. I still have half that position. It's in fuego. One of the things that I teach you guys here in the futures room is don't rely on the 1 minutes only. In other words, you know how nice it is for me to know that the Dow is something we've already got exposure to? Do you think I feel any need to chase? No, not even a little bit. Right? Not even a little bit. Why? Because we've been long since the 4th. Right? We've been long since, I'll show you where we got long. That day, it's that tiny little candle right here, around 33,000, 34 even, 34,000. Yeah, we're almost 1,000 Dow points into that trade, gang. You think I feel any need to have to press my intraday trades? That's what I mean by when you have a full trading life, your trend following and your day trading, both will benefit from the fact that you're not putting all your eggs, quite literally, into one basket. Okay? So I hope that makes sense. Yeah, I see the Dow. I would love to get a breach retreat for us. I would love that. But I'm not going to force it. Although we got really close. We did get really close. Well, no, maybe not that close, but 10, 12 points. I think we got down to 94, 96, not quite 80. All right. Let's see what else we have here. So it's 10:15 right now. I've got a plan for the Dow, an open DIA position since last week, Wednesday. Long SPY calls. So one of the questions is, all right, Rog, what's our target for our SPY? Just like our setup was built on the what the heck is that? Just like our entry was built on the ES. Just like our entry was built on the ES, our target is also going to be built on the ES. So, usually I like to see it get up to the clearing range high. So I'll say this: if you're looking for optional target on ESSPY. Use, I think I'll use that 42.28 area. First target, however, $42.31. $42.21. So while our DIA just rocket ships higher, or YM, I love the S&P to kind of follow along with that. The value area high at 42.25.5, that didn't give us really much to work with. So if you're wondering, Rog, why not the value area high? That was pretty much break even. So I like the double green of the Dow. If the NAS can even go yellow and stabilize, great. But if the Dow keeps going higher, I'm feeling pretty good about the ES getting at least back to 42.28, if not tagging 42.31. Feeling pretty darn good about that. All right. Again, if nothing else, we've already got exposure to the Dow since last Wednesday. We did that live here in the room, if you guys recall. The markets were heading lower, lower, lower. Yellen sent them lower, said, heck with this. I've lost my edge intraday. Let's switch to the end of day. And I hope a lot of those trades. So yeah, let's for a second, since we have a lull in the action, let's talk about those for a moment. We got long Bank of America. If you guys grab that trade, are you pressuring your day trades to do something? You're not. We grab DIA. What else did we buy that day? I believe we bought XLC that day as well, the 4th. Which is doing fine and already hit the first target. We bought Southwest, which is looking pretty darn good. Angry Jack, yeah, thank you. Yep, we bought LUV. Thank you, Angry Jack. I think that was it, right? Was that it that I did with you guys on? Hang on. You know what I can do? I love my workflowy. I can tell you exactly. Well, no, I don't think I put it in workflowy. I think we did those in notes. But anyway, so yeah, we've got a longer term trading book that's very much working for us. And I hope you guys are managing those with the alerts that I sent. Our first target on Bank of America was stepping out in front of 41 at 40.95. All right, we've already done that. And now I'm going to wait. I'm just going to let this market run. A lot of folks want those target 2s so quick. And I don't do that because I want you guys to be able to benefit from what I think is A, plenty of time on the option, and B, a really nice trend. So then I take a look at Love, Southwest, and our first target was stepping out in front of 63, right? First target was 62.95. Right, we're not there yet. We're looking good. Nice unrealized profit, but I've got another 40, 50 cents to go. Okay. Do we do Cisco that day? I don't think we did Cisco that day, did we? I'm trying to keep it to where both rooms were benefiting from the setup. I don't think we did Cisco that day. Although, yeah, Cisco is running really nice. Yeah. Yeah, I didn't think so. Yeah. Was Kroger that day? Mark H, we did Kroger that day too? I don't think we had done Kroger that day, but anyways, Kroger's looking pretty darn nice too. Yeah. So this is what I mean, gang. Managing. Yeah, we did a ton that day, right? So when things are on sale, like when things are on sale, I'm grabbing my arm, scooping everything up with my forearm and pouring it into my shopping basket. Yellen, I know everyone gave Yellen a hard time, but I don't know about you guys. We're sending her thank you cards, are we not? Everyone pen your thank you card to Janet Yellen for those great trades for us. That is what buy the dip feels like. What did it feel like? Everyone else was running around with their hands in the air. What did we do? We went shopping. That's the difference, gang. That's what buy the dip is. Everyone kind of flexes this buy the dip bravado until it's time to buy the dip. And most of them go running tail between legs, right? So it is a different way of trading the markets. It's easy to buy new highs. It's easy to be a Momo trader. It's very microwave brownie. It feels good. It's fast. It's not going to outperform most of the time. In a non-parabolic market, it's not going to outperform just good old-fashioned dip buying. That's trend trading, gang. That's trend trading. By the way, it's not that different than what we're doing on a 1-minute chart either. All right. Okay. Moving on. Moving on. Dang, either I get my pullback on YM. Either I get my pullback on YM or I'm pretty much positioned for the morning. I've got the pitches. That's all I've got. That is all I've got. So either I get my pullback on YM or we get it maybe, even more aggressively. I can play maybe a 13 exponential at 34,893, 894. That would be a 13 propulsion dot, 13 EMA propulsion dot. Maybe that looks kind of interesting. Aggro, but it front runs our other setup by 10 points, 10, 12 points. But just kind of a sloppy morning. It's a bit of a sloppy morning. And NAS is typically, gang, as much as I don't want you to trade the NAS, we have to pay attention to the stupid thing. Why? Because the weighting in terms of individual stocks and sectors from tech is unlike other sectors. They're weighted significantly across the broader averages, S&P, Dow, and NAS, of course. But they're weighted quite heavily in the S&P and the Dow. So their influence is far-reaching. So it's 10:24 right now, almost 10:25. And we're coming into our 10:25 to 10:35 volatility zone. 10:25 to 10:35. And if the ES doesn't breach, then there is no breach retreat on that. If it doesn't breach by 10:30, then there's no breach retreat to be had. So I need the breaches to happen by 10:30. I'll give them another 30 minutes after the end of the clearing. And then the further away we get from the clearing, the less impact a breach actually has on momentum and trend, is what I've found, generally speaking. So if this market wants to find a low, 10:25 to 10:35 would be a great time to sort that out. If our Dow is going to pull back and give us an entry, 10:25 to 10:35 is a great time to see that happen. All right. So I'm just going to keep an eye on the YM here. Remember, we have that limit order waiting at 880. Minor psychological level. 885 could be kind of interesting. 885 to 883 stepping out in front of that minor psychological level by a handful of points. Each point in the Dow is $5. Each point in the Dow is $5. So if you want to step out in front, of the 34,880 minor psychological level. Then 34,885, 34,883 is cool. Okay. 25 to 15 bucks if you want. That's one of the hazards of putting a level like an 80, a 20, a 50, or a 00. Sometimes the market front runs those psychological levels. The minors, 80s and 20s, aren't as common. The 50s and the 00s more so. Okay, getting awful close. So if you want to do that, that's fine. If not, it shouldn't matter. At this point, it shouldn't matter because we hit 33.79. Okay. The 34,880 was filled with a 34,879 low. And that triggered at what? 1026? 1025? So we're long Dow from the aggro. Now, for some of you pass on the aggro, what to do at an aggro? DIA, micro, or a small number of minis. We don't back the truck up. We do not back the truck up at an aggro, at an aggressive, small position. Because it's got the largest chasm to the stop. So I think for most traders, micros and options are terrific. And look how much time you had before we even touched it. You had plenty of time to look at the alert and sort that out and say, well, okay, well, if I want to go the micro, I want to go the DIA route, then what is my budget? What am I willing to put on, what am I willing to trade? Some of you might have, because if you've been with me for any length of time here in the room, you're already thinking, what are XLI and IYT doing? And if you're not, I have utterly failed you. Okay, you're already thinking, what else could I be looking at? All right, let's see here. And remember, first target is on the Dow. I'm going to give you guys 34,897. Oh, no, 34,920. 34,920. Let's see, J Bottom, you bought some Doge. You bought some, I will tell you, some of this stuff is just fun. Sometimes people forget some element of trading is fun. And the cheaper the thing is, the less risk there is. When I first bought Bitcoin in 2016, it was just for fun. It was cheap enough that it could be. But yeah, it is kind of fun to put a little skin in the game on these crazy narratives. Look, when the GameStop thing was happening, I didn't play GME, but I played AMC, I played costs, right? So some of that stuff's just fun. Inexpensive. I think I bought costs for $7 to $8. Yeah, sometimes it's just kind of fun. I'm with you. What was hilarious, though? If you were looking for a total pump and dump, buy the rumor, sell the news type situation, it was buying Doge last week before the Doge father was on SNL on Saturday. You guys saw what happened to Doge over the weekend, right? Because crypto trades, 24/7. You guys see what happened to Doge after the SNL? All right, if you didn't get your fill on YM before, there it is. We're taking some heat on the, did we hit 28 again before we dump? Because if you got out at 28, you've got to be at a break even on SPY. If you scaled out of your SPY, if you did, I don't know that you guys could have at 42.28, break-even exits are in play. If not, you're just taking some heat. That's okay. You already know what down 15 and down 25% are. Okay. And if you didn't like it then, if you don't like it now, you shouldn't have liked it then either, right? At the entry. But if you scale out a SPA at 40, SPY at 42.28, the break-even exits are in play. If not, don't worry about it. If not, don't sweat it. Nas just took another leg to the downside. And our YMs just retested our entry, which is fine with me. All right. What else do we have here? Do I have any Doge? No. I have Light, Ethereum. Well, Light and Bitcoin I bought a long time ago. And I just bought Litecoin because it was, you got to remember, this was 2016, 2017, right? I don't have any Doge. I have Ethereum. I have Light. I have Bit. And Bitcoin is the reserve currency of crypto anyway. So, and I'm looking forward to the Bitcoin micros. I'm looking forward to the Bitcoin micros for sure. All right. So let me grab some questions here from our live stream. Great to have you guys here. Thanks for joining us for our live stream. We do it every Monday and Friday. For relative volume, Salin, I don't use relative volume, although it is kind of a neat tool, and I've played around with a couple ways to create that. I don't actually use relative volume, but the historical volume that I use, the look back is 6 months. 6 months. So whether it's my HPMRs, whether it's my DPMRs, the look back is 6 months. So I'm going to look at, so by the way, yeah, am I looking at the micros? I want to see how the open interest in volume and price action kind of get a feel for, let it trade for a couple weeks. I'm going to let it trade for a couple weeks. And then, yeah, I'd love to start looking at that. Absolutely. The movement is there. Yeah, the movement is absolutely there. So let me reiterate a few things. If you were looking to short anything, I'm not, but if you are, use the VWAPs, and the NQ was the only short candidate. So some of you that have been doing that have said, hey, Rag, I'm loving this VWAP thing that you're showing us because it's increased the probability of the fades of the upper end of the range working. The longs are still S&P and Dow by a landslide. And the Dow is your best relative outperformer. I know that there are going to be those days where the market might move lower, but again, the probabilities of a long-only book have been far better than the probabilities of short-only book. And what do I mean by that? Well, what I mean by that is this is my long-only, and I don't have shorts that I'm playing. So when I say it's my long-only book, it's not like I have another book out there of trades, okay? This is a long-only. And so, the starting value of this account, gang, was 55K. Just so you know, just to put it in perspective, all right? I don't want these numbers out of context. The 55K account back on 12/16, I could open that account, and then I started trading it Jan 1. So this is only a long book. And you'll see that there are times where I pull back, like in here and in here and in here, and we pull back in here and we pull back, right? Or flatlined, right? And those are going to be those brief periods of time where the market either was flat or choppy. So there were a number of those, but from Jan to the end, so this is the beginning of May, right? From Jan to May, sticking with the long side of the book, yeah, sometimes I was flat for a period of time. You know, sometimes I'd go a few weeks and I really didn't add much to the overall book. Gang, that was 1, 2, 3, 4 weeks where things just sort of treaded water. But look at the overall trajectory. That's what I'm talking about. Okay. So today, if for whatever reason, I've got to take my medicine on the Qs and the SPY, and I really, quite frankly, should have taken my medicine on the Qs, but they're so inexpensive and it's small enough a position where it doesn't threaten my account value threshold. So yeah, I can push it a little bit there. Those of you that are in the Sector Secrets Mastery as well know that I'll push certain valued options because, again, the threshold doesn't exceed the allowable of the account value. So if the Dow bounces up to 920, ding, ding, I've got a great trade. I'll call it a day and I'll shut it down because it's a pretty sloppy morning so far. If not, this will be one of those weeks. I think one of the weeks I remember early on was the last week of June, and even the middle of, no, sorry, June. We're not even there yet. We had a time travel there, Rog. End of January, I had a couple weeks where it's like, the whole week just ended up being a negative week, and I pulled back in terms of my high watermark. And you're going to have those. A losing week is not a big deal. A losing day is not a big deal. I just don't want losing months because that means throughout the month I did not course correct. You can't course correct that much in a day, and it's even tough to course correct in a week, but you can course correct over the scale of a month. So I grade myself month to month. More, I do monitor week to week, but I don't really grade myself. I don't get too hard on myself day to day or week to week, but I do want to monitor how it's going. So yeah, a long only book, some weeks are going to stink, but the overall trend is going to be far better than I believe a long short book or a short priority. And I'll tell you what, when the markets make higher highs, holy cow, people want to start fading them. They want to start fading tech. They want to start fading strength. Like, why not short weakness? We don't have a lot of weakness right now. Okay? We don't have a lot of weakness right now. We have a lot of relative outperformance. Yeah. This is my futures trading book, gang, and we're going to have a webinar on this in the next. Oh gosh, Trish knows. I forgot. Trish is the keeper of the calendar and on my schedule, and I can't remember, but that's coming up. The Sector Secrets. Yeah, this is the Sector Secrets. So a lot of folks ask, what do the 10K do with the 1,500 approximate budget? And I haven't finished updating this. So yeah, these are 22 trades since March, and these aren't all of them yet. I still have some more to throw in there. I just upload the statements week by week by week by week. So anyway, that's what the Sector Secrets has been doing. So we reset in March. Yeah, and it was a $55,000 account. So yeah, this account is not last year, gang, I did, what could I do with 10K? Right? And really, honestly, who cares about 2020? If I see any more discussion about what somebody did in 2020, get out of the way. Tell me what you did last month. I'm always going to tell you guys to ask me, Rog, I don't care what you did in 2020 anymore. It's 2021. Who gives a rat's what you did in 2020? What did you do last month? What did you do the month before that? So that's what these are showing. These are all 2021s. And it's not been look, in 2020 in March, I had a 6-figure month because the markets just absolutely melted down. But that's not what we're getting this year. So what's the point of me talking about March of 2020 when we're, so that's my point. And by May of last year, the uptrend started. We had the monster V bottom and the uptrend was well underway. And like I said, my cat could have tripped over my keyboard and bought something that was probably going to 3x. Who cares about 2020? So, the March was a little tough because we were coming back from February. And that February was tough. February, if you remember, we had that huge unwind in tech when tech was doing well. We had a huge unwind in semis, which hurt me. I had a really great run in semis until the end of March. And then what did we do at the end of March? End of February. Sorry, that was all end of February. Semis rolled over, tech rolled over at the end of February. And then what did we do? Our first 2 trades were to get long home builders and construction. right? To start looking there. We started looking elsewhere. And the easiest thing would have been, the trap would have been to start looking at tech again. Oh, I took my money. I'm going to get back at you. No, we just discarded it. We moved the heck on and we moved elsewhere. We looked to where the relative outperformance was. So, that's that. As we look at the Dow sort of stuck, just stuck. Just for reference, gang, just for reference, I don't want to forget what we did during the agro part of the morning, but the SPYs, May 10, 421s are trading at 108, 109. All right. By the time we got down to our zone, I paid $1.40 for these. So I've got $1.40, right? I've got $1.40. So, and whatever your number is, know what that 25% is. And the cool thing about the 25% is you can pretty much cut the value of that in your head at the time. So I've got 35 cents to play around with. So I'm pretty close. But again, at $1.40, even if it cuts in half, I don't want to ever risk full debit as a general rule, unless I'm going into earnings and I'm willing to hold through earnings. But those SPYs, yeah, they're kind of hanging in there. I'm not happy with them, with where they're sitting, especially when, we were so close to seeing what we were in 3 points of our target. It happens. And then we fell 8 points out of nowhere, 10 points. We fell 10 points in the ES out of nowhere, thanks to the NAS. But yeah, again, if my job is not to necessarily get to the plate and hit a home run, I want to get on base. I really like to, but if I have an 0 for 3 day, 2 aggro trades and one of my YM day trades, if that's ultimately what happens, that's what happens. But again, I'm not grading myself every day. We're going to take a look at our progress through the week and grade ourselves at the end of the month. And it's 10:45, and I don't like the structure of this market. I don't look at this market and feel like I've got an edge. I really don't. So for those of you that are wondering, what are you going to do from here on out? I'm going to manage the Qs at this point with more of a 50% premium risk because, I don't have a big position and it's not going to really even scratch anything in the account. ES is still within allowable levels at the 25. So I'm just going to have to humor that nonsense for a little while, see what happens. And then the Dow, I have my unrealized trade open. I mean, unrealized, it's a slight unrealized, what is it, break even? Oh, like break even to slight, maybe a point or two down. That's it. So at 10:45, I don't look at this market and think, wow, what an edge I've got. I'm done trading, gang. I'm going to manage what I have and I'm shutting it down. There's nothing here that I like. I've got my YM ideas, which is my relative outperformer out there. If those levels get hit, then great, I will take them. Other than that, a day trader's best friend is tomorrow, is the next session. So if I don't feel like I've got a great edge here, that's it. I'll shut it down and start again tomorrow. I'll look at the first 2 hours of the day and keep them paper cuts, gang. When I was showing you that little P&L on, you saw some times where I lost in the week. There were quite a few flat to losing weeks. That was a losing week from the high water. That was a losing week. There's quite a few losing weeks on the way up, but I just persist. I don't mind a losing week if I'm still focusing on the broader trend. So what I mean by losing week, that means when all my trades were tallied up compared to the week before, I was below that number. So when I look at my P&L, the P&L did not grow that week. If anything, it contracted. It contracted that week. So I had, let's see, on the 27th of, sorry, no, those are days, not weeks. Sorry. On the 20, I had a contraction from 27th to 28th. I lost that day. Sorry, these aren't weeks. Do I not have these in a week breakdown? Anyway, so those little contractions are losing days compared to the high water mark of the day before. They're going to happen, gang. They're going to happen. Yeah, Feb was tough. Feb was tough. February was very tough. And I'll tell you what, the end of January was no picnic either. Yeah, Jan was no picnic either. Jan was pretty awful too. End of January. So, yeah, there's a really good chance that I'm just going to have to pull. Yeah, very likely I'm going to have to pull my two options trades, 25% premium threshold, and the Dow's still holding up okay though. The Dow's still holding up okay. So at 1047. Take a good look at what I am willing to risk on my SPY and QQQ aggro clearing range entries. Best to take my medicine and cut them loose. And focus on the YM post-clearing setups. And I will not be looking to re-enter anything else. Re-enter the Qs or SPY. Again, tomorrow the next session is a day trader's best friend. When we forget that we get to sort of start fresh, if you will, every single morning, I don't have to persist trading for more than 2 hours, which I don't enjoy doing. And again, I've got, and this, I know it's not a futures conversation per se from a day trading perspective, but let's also remember, gang. In fact, I think it makes a lot of sense to shift gears for a moment away from the 1 minute or 5 minute or whatever short term you're looking at. And remember that we're long copper and we're long, I believe we're long euro in this room too. I know we're long euro in sector secrets. And I know we've been talking about currencies in the premium. We're long the Canadian dollar. We're long Canada. So I'm kind of giving you guys an overall look. We're long crude, which from back in here. So that's still a nice move. RBOB. Right? Some of you still have June corn. You lucky June corn traders. Yahtzee. So again, if you don't have a full, well-rounded trading approach, today's trading might feel very frustrating. The reason I don't want to say I don't care because I don't like losing. But the reason it's not going to get me down is everything else that I've got going on in not only the futures on a swing trading perspective on daily timeframes, but also my ETF and stock options, also on a daily perspective, are doing very, very well. So I don't feel the need to keep pressing an advantage that I don't have, right, on the intraday. And I'll just let the other trades that I've put on do their job. I'll shut it down. I'm going to shut it down now, basically. No new entries. Manage what I have in the Dow. And if that punches up to 920, that actually salvages a lot of the morning for me. It'll salvage a lot of the morning. That's 40 Dow points. Not too bad. All right. So that's it. That's it. So again, I cannot encourage enough. What we do in the morning and what we do in the chat rooms tends to sometimes be very short-term in nature. And I love and I hate that. I love day trading with you guys. It's great. But I hate the fact that it somehow limits many traders to just looking at the twitchy little 1, 5 to 15-minute time frames, when in reality, a lot of my best trading this year has come from the swings. End of day time frames where we've either bought futures, calls, bought the futures contract, or bought the alternative ETF option, whatever it takes to make you guys comfortable to sleep at night with that overnight position. And those have been very, very good. And those have all been reflation trades. So is my current book. Most of my current stock and ETF book are reflation trades. All right. Okay, so let me do this. I'm going to go top off my water, and then we'll come back and we'll do maybe about 30 minutes of Q&A. I'll give you guys a break, and then David will be here at the bottom of the hour to take you all through the remainder of the morning in the futures room, and we'll be wrapping up our live stream. Okay, gang? Let's take a quick 2-minute break, just 2 minutes. And let's come back at 10:55. Let's be back at 10:55. All right, 55 past the hour, and we'll start getting into some Q&A and probably look at some longer term stuff. Okay? All right, gang. Okay, let's get to it. So let's answer some questions, both from the live stream and here in the room. Again, I would love if you guys also are taking a look at some of what's happening on the longer term timeframes. We'll talk about that. I'll monitor my YM, which is my largest trade of the morning, because it came after 10, because it triggered after 10. It's my largest trade of the morning. Let's hit 920, sort of salvages the morning, and not too bad a morning at that point. All right, so I was looking at 6A and crude. I was looking at 6A and crude for potential buys. I don't mind either in terms of if I can get the setup. I'm not loving what they're doing, hence I didn't really, you can see what I'm looking at. let's see, where did I put it? Yeah, crude. Looking at that area around 10. We are below that. We are below that, by the way. Then I was looking at also the 6A, which has just been choppy as all heck. But I do like the 6A potentially to the long side. I still like that 6A to the long side. I don't mind even crude to the long side, but that 78 area, we're way below that at this point. We got down to the clearing range low on 6A. So 6A and crude, interesting levels to look at, but low risk enough, but not really ideal. Yeah, really just kind of ugly morning. All right. So questions. Is there anything that you could do now? I'm not going to. I'm not going to enter anything now. So I'm already in. I'm waiting for the Dow to hit 920, and at that point so what happens when the Dow hits 920? Okay. But remember, that's a YM trade. It goes to 34,920. I will scale out of, and for most of you, that probably was the only trade that you took because everything else was aggro. Right? So some of you are in DIA or YM because that was the only breach retreat. I love V-score setups, but I like them after 10. I like almost everything better after 10. But I'll scale out of 50% of my position, take 40 points per contract off the table, right? Which is great. Yay. Move the stop loss to about 2 to 3 points below my entry. That's my break even. Even stop. And think about what T2 is going to look like. Think about T2. I'm not getting flat, gang. Hey, if this market can continue to trend, terrific. I don't want to get in its way. Maybe we can hit 980, 975. Let's go over to YM while I'm typing all this out. So the plan is to scale out. Well, I don't need to do anything at 920 because I have a limit order to sell that's already sitting out there for half of my position. So that's already automatically happened. Okay. So our only conservative setup of the morning, which was in the Dow, triggered. Now, logically, the next question is, Rog, where's the next level to get out? Gosh, gang, I may not even think about anything until 34,980, 35,20. I mean, I'm going to look for something way out there. It may not ultimately be that. It might even be the upper end of the V-score. I might look for the upper end of the V-score to get hit, our morning V-score. That might be another really good level. V-score, stepping out in front of 35,000. There's a lot to like. But if the markets are moving and you've scaled out and you have a break-even stop now, do not smother your trade. Do not smother your trade. A lot of traders tend to smother their trades. Don't. All right. So then, it's a really important point here, gang. I'll put this here. There's a big difference between pre 10 a.m. trades and post 10 a.m. trades. We simply know more after 10. We've gotten through the clearing. We've gotten through that mosh pit, range expansion, historical volatility window. All right? So, so when I refer to shutting it down, when I refer to shutting the day down, yeah, that's probably a little bit of a misnomer because I still have those Dow orders out there. So I still have the HPMR. Well, let me do this. The June Dow HPMR setup is no longer valid because it's 11 o'clock. So cancel those limit orders. Okay, the June HPMR setup is no longer valid. It's 11 o'clock. There was a 10 to 11 o'clock window. So you cancel those orders. That's one thing. So I don't have any more of those to think about. And then now that T1 is hit on the YM, I'm really not interested in the rest of that chain. I didn't get to moderate. I didn't get to, clearly I did not get to conservative. So I'm just managing that open trade now from the aggro. That's it. That's it. As far as questions about indicators, my creations, if you will, HPMRs are free for members. I put the and I gotta. So one of the things, gang, I'm not an indicator vendor. I don't. That's not my thing. I'm not great at creating them. There's nothing wrong with it. Indicators are very valuable, but most of my indicators are pretty simple. 34 EMA wave, Darvis, propulsion, they're pretty simple. And we've given those away for 5 years now. Plus, we've given those indicators away for free for a really long time. But there are a couple of tools that the V-score that that was something that I actually did not want to share. And then my partner here in the office said, no, that's a really good indicator and you got to do it. That's my main premium indicator creation. So HPMRs are free for members. They have to be updated regularly. It's not just not a tool that like most indicators is a code and it's done. That thing has to be updated regularly with the updated HPMR levels, with the updated volatility levels. All right. So HPMRs are free for members, and then V-score is part of the VWAP Max Toolkit, which also includes the anchored volume weighted average profile and the anchored volume profile. Those two are not of my creation, but irritatingly enough, they're just not available on a lot of platforms. An anchored VWAP, which should be as common as a exponential moving average or something, but for whatever reason, platforms don't have them. Well, many platforms don't have them. So I just threw those in there with my V-score. All right, so V-score is part of the VWAP Max Toolkit, and that's intraday and end of day version. And that's it. That's where and you can find those. You can find the indicators in the Simpler store, or if you're taking any of my classes, one of the things that my partner here in the office does is we basically put the request in to have the indicators as part of the package. So I'll let you guys know if that's going to be the case for my upcoming class or not. I do not know. I know it was included for Submarket Sonar, and I think it was included for Ultimate Day Trading class, but it's a blur. But I'll let you know. But you can find find it in the Simpler Indicator store. And I will also tell you if and when we update it, we include the updates. Like, for example, after we released it, we came out with V-score bands. The V-score bands are what allow you to see where the V-score levels are sitting at on the chart. So we just added that to the toolkit. You guys want to pay more or anything else for it. And right now, Lorna's working on a few tweaks that I wanted to the V-score. So if and when we finally, if it ever leaves Raghee Laboratory, if we ever get that thing out of Raghee Labs to the point that we like it, and I'm actually just testing it out right now, then that's going to be the updated V score. And that'll get updated for those of you that have bought it. So if I ever update it and tweak it, then we just, that's just, you bought it once, you bought it once. I don't see myself redoing the calculation of my V score anytime soon and turning it into something else, because it's the same process that I used since '08. Yeah, in '08. And yeah, we're working on TradingView too. Hopefully with the bells and whistles, but we'll definitely let you guys know. So that's one of the questions that I saw there. All right. Dow continues to move higher, which is nice. So we'll think about T2. Just to put it out there, June YM second target is potentially, just so you guys know what I'm looking at, all right, going to be either, I'm either going to step out in front of 35,000, so 34.9, 995, 997. I'm looking at that. Or, quite frankly, more ambitiously, 35,045. So what I may do is tighten to a trailing stop. Tighten to a trailing stop when we're nearing 35,000. It just depends on how the market looks and what time of day it is. But, here's a cool thing. I'm just risking house money now. This trade is now at a break even, and I've got the latitude to do a lot of creative things with it, because now I'm just playing with unrealized profit. I'm not in a situation where my capital is at risk any longer. This is where traders should feel, again, to use my beloved baseball analogies, it's on the pitcher now. It's on the pitcher now. All right, this is a 3-0 count, gang. Now we're just playing some game theory, if you will. Baseball game theory. So it's a 3-0 count. For those of you that are not baseball fans, what does that mean? It means a pitcher's thrown 3 balls, no strikes. I'm 1 ball away from a walk to first base, and all the pressure's on the pitcher. All the pressure's on the market now. We have no pressure on us any longer. So, I don't want to do anything dumb. But you're in a basic, this is simple risk reward theory, gang. So the next pitch is either a walk, all right? It could be a strike, and then I still have 2 more strikes to go. And that means the pitcher has to throw 2 more strikes in a row. Game theory, gang. Straight up game theory. A lot of game theory in baseball. So they have to throw 2 more strikes in a row and then where do strikes have to be? They have to be in the zone. Yeah, just don't ground or fly out. Exactly, Twitchy, exactly. Put it on the pitcher. In this case, 3-0 count, we're putting it on the market. And again, a lot of times, really good hitters will swing at a 3-0 pitch, because what does the pitcher have to do? They have to put the ball in the strike zone. So then they're just praying that the batter can't hit a breaking ball, right? Anyway, can you hang on to the 6A? Yeah, I've got a small position in 6A. Michael, I do have a very small position in 6A. I never loved the setup, hence I didn't send it out as an alert, but I do have a small position in the 6A. Actually, I have a small position in Crude too, but they weren't quite what I wanted. I just threw a small, I just put a small position out there. The position that I liked, the trade that I liked, was the one that went out as an alert. After 10 a.m., breach retreat, relative outperformer. That's why I pushed the Dow out as an alert. So if you're in the futures room, you know there's only four alerts that came out. The notes, 2 Dow alerts, and then the cancellation of the HPMR setup. And now we're just going for it for T2. And I'll send this out as an alert for you guys. So basically, this is an update, right? The June YM second target is potentially going to be a 34,995 limit sell, or more ambitiously, a 35.45 limit sell. I'll trail a stop after. If we hit 34,995, I'll send another alert out to trail a stop. Because after the second target, I want to go to a trailing stop. At very worst, the first profit target, maybe even more ambitiously, something closer. All right. Hey there, Rob. Your May SSM account is up over 50%. Oh, very nice. We've been on a tear. I will say, since the end of February, we've been on a really good tear. March had a couple losers with some rollover. It's mostly in energy. I think energy hurt me in March. April, gosh, we were just connecting so much. Yeah. Oh, hang on, gang. Wait a minute. Oh, there you go. I just heard from Trish. So so for those of you that are, it will be included, she said. The VWAP Max will be included. The reason I'm giving you guys a heads up, it's a really much better bang for your buck. I mean, look, if you want to go by the indicator, go for it. But truth of the matter is, I'd like you guys to get as much value as possible. And so, she said it will be included. So cool. Super happy. Yeah, February was rough for, I think, everybody with the semiconductor and tech rollover. March was tough for me because we were playing these great reflation trades, and then energies rolled over, which that was a tough window, those particular trades. And then April, we were just kicking butt and taking names. And in May, I mean, it's like the market's been throwing underhand at us. It's been great. I mean, it's been really good. I think the biggest thing I had to complain about was Lyft. We had a great trade in Lyft that was 20 cents from a target. And then we had a political headline, just annihilate Uber and Lyft. So that's really been the only stain so far, really, on the book. We had some small losses. I mean, I didn't go undefeated, but it's been a really good run since through April. Yeah. So Rob, I'm with you there. It's been really good. And why? Because we're not playing what everyone else is playing. We're back to playing reflation. We're looking at other markets that aren't tethered to tech. Yeah, we're looking at some unusual things. I mean, anyway. So what I mean to tell you guys is, don't look where everyone else is looking. Generally speaking, consensus trades are not going to be trades you want to be in. You benefit from a trade going consensus, as our corn trade did, as our uranium trade did, as our oil stocks did. You want to benefit from the markets going consensus. You don't want to engage them while they go consensus. All right. A couple other, so oil hurt me in March, and then cloud computing hurt me in April. So I don't mind mentioning where we rolled out of, because I want to avoid those now. In March, the rollover, the XLE trades, the oil stock trades hurt. And then in April, the cloud computing trade, it definitely fell apart. But because the risk management and the position size is a big deal about the basics, the basic ground rules for those. When we do take a paper cut, they hurt. I mean, we took 3 paper cuts: Cloud, CLOU, DBX, and Box. Yeah, so boom, boom, boom. So it's not been without some misses. They just haven't been the bulk of the book. And that cloud competing rollover was really unfortunate. Cloud and those related trades and lift. Yeah, other than that, full steam ahead. And yeah, we're always going to have certain sectors that finally roll on us. And you're going to notice we're going to benefit for some rolling out, but mostly we're going to benefit from most of the rolls in. You know, that's just the way the markets work. All right. Yeah, we want pre-consensus. Exactly. J bottom. Exactly. So grains are going to have to pull back a lot. ZC, ZS, they're going to have to pull back a lot for me to do anything with it. Yep. Locutus asks, was the agro buy and YM hit twice, my friend? If you had the limit order out there, it was hit twice. Correct. The aggro for the breach retreat. We also had an aggro for the HPMR, which we got nowhere near. But the aggro for the breach retreat was hit twice. Yes. You got it. Okay. What else do we have here? Yeah, so SPY, QQQ gang, I would just have to say those were just, womp womp. Yeah, unfortunate. But what I hope you guys are getting, whether you're in the live stream and observing or whether you're watching with me, anything I do before 10 is going to be aggro, gang. It's going to be aggro. What time do we hit it? I think 9:46 or 9:45. What time do we hit those the first time? No, I'm sorry, at 9:46. 10:26 or 10:25, I think. I thought 10:26 was the first time we hit YM. 10:26, I believe. I'll have to go back and check. What else do we have? So remember how I anchored the VWAPs to determine directional bias? Yeah, NAS is bearish below those two anchored VWAPs. We have re-anchored the monthly VWAP, gang, to we have re-anchored the monthly VWAP on the chart to the 1st of May. So any monthly tools you have, re-anchor them to the 1st of May. And the 10 days on the 30th of April. And that will stay that way until Thursday. Yeah. Because we'll be in the weekends. We don't want to anchor the VWAP to a Saturday or Sunday, so keep it on the Friday until we can anchor it to the Monday, which will be on Thursday. All right. So gang, remember, keep managing your YM. That upside target doesn't look so crazy anymore, does it? Like I said, one of the biggest mistakes I see traders make. By the way, gang, at the second target, my S&P futures and QQQ. If you guys now QQQ, we had to take the medicine on. S&P futures got very, probably took medicine on that too. But if you're willing to risk about 50%, which is I took a 50% haircut on that NQ. So NQ was a 50% loss for me. And I kept the same for the S&P. So NASDAQ, I ended up taking a 50% premium loss. All right. Yeah, NAS did not do me any favors. Luckily, it was a smaller position. As I mentioned in the notes, my SPY position was 2x. But once I let NAS go 50, I let my SP go 50. Again, as long as it doesn't exceed a certain risk of your account, for me, it's about 5 to 7%. You've got to look at your account value. And those are things that I teach in my classes, gang. And those are things that are very much sort of the ground rules for position sizing and risk management, which, by the way, gang, really are the same conversation. Position sizing and risk management are the same conversation. At this point, that YM and ES trade will definitely be, will erase my QQQ loss, which is nice. And I do want to get out of ES sooner rather than later. We hit, as soon as we hit 42.28, I'm done. I don't trust the NAS at this point. So let's go ahead and get out of that. And then let's manage our YM. And then it's actually turned into a pretty decent little morning. So if you took medicine on QQQs and SPY, no problem. I think you definitely had to take medicine on QQQs. SPY, depending on your threshold, if you took medicine there too, that's fine. Remember, clearing range trades are smaller positions. Dow is a much larger position. A breach retreat after 10 a.m., even from the aggro level, gang, I'm going to have not a big number of YM contracts, but I'm going to have quite a few. And so your position sizing after 10 should be bigger than your position sizing before. Why? One's aggro, one's not. V-score lows after 10 are awesome. V-score lows before 10, they're aggro. They're still awesome, but they're aggro. SM, yeah, I gave the QQQ so much latitude, it made no sense for me to not risk a little bit more on those SPYs. And again, look at the cost and ask yourself, if I lose 25%, how much of a percent of my account loss is that? If I lose 50%, how much of my account loss is that? You really should stay within 5 to 7%. Okay. Oh, for those of you that are in crude, I'm looking at 64.80 to 64.90. Yeah, it's pretty much going to be a break even for me. And I'm very happy about being, and same thing goes with 6A. If I can get about to 78.90, 78.80, I'll probably, those will basically be a wash. Those will very likely be a wash. And if you're in S&P, gang, maybe don't wait for 28. We have a low HPMR reading at 27. So 27 for those of you that are in SPY, yeah, that might be a good place to scale out if you want to scale out or get out. I think traders are mostly selling the rips in the NAS. And so that's going to affect the S&P's upside despite the Dow knocking on the door at 35,000. So maybe 42.27, gang, 42.27 for those of you that have SPY, scale out or get flat there. All right. If you still have it. Let's see, Jonathan says, I made some money with the SPY, couldn't let a winner turn into a loser. I love it. So probably fed the ducks before the first target. Jonathan, they say you feed the ducks while they're quacking. So if you felt those were quacking, never ever beat yourself up for scaling out. You don't randomly feed the ducks, right? You feed the ducks while they're quacking. I gotcha. Which is basically, pay yourself while you can, not when you have to. Exactly. That momentum, especially for the SPY, is so important. When you're playing options, momentum is far more important than the underlying. Underlying futures, going up, going down, the fill is the fill is the fill. Going up, going down in options are very different because the momentum dictates which end of the bid ask we're getting filled at and which way the momentum is moving in terms of the bid ask. So, no, well done. Super well done. All right, so I'm happy about the Dow. I am happy about the Dow. That's great. I'm a little disappointed that the S&P and the NAS just took the scenic route, especially the S&P. Wasn't as tethered to the Dow as I would have liked. But hey, it's a mixed morning, and I like that we're still able to walk away with a win on a morning like this. I'll be with you guys tomorrow in the futures room. Yes. Cal? Yeah, I'll be with you. I'll be doing I do the open every Tuesday and Thursday and every other Monday. And every other Monday. And my live stream, folks, next, I'll see you guys a week from next Monday. So not next Monday, but the week after. So we got some agro-aggressive trades this morning, small size. I'm bummed about those. Look, I'm glad that the Dow is doing what it's doing, but I am kind of bummed. I'm a little disappointed in that ES. It was a nice setup. It really was. Still a little disappointed. All right, gang. So I'm going to give you guys a break. Mr. David Starr will be here at the bottom of the hour. Our Aliatician. David does, some of you are using David's Trend Spark, cool indicator. Definitely check it out. David has the premium video in the members dashboard in the evening called the Elliott Wave Dispatch. So check that out as well. And go stretch your legs for a couple of minutes. David will be here at the bottom of the hour. And my live stream folks, come check us out. If you head on over to simplerfutures.com, I believe it takes you to the Simpler Trading Futures trial. So come hang out with us, kick the tires, $7 for I think a week. I don't remember what the trial is anymore. So come on over, come check out what we're doing. You get to benefit from all 5 of us throughout the day. And we will definitely teach you a little something while you're here. I think you'll pick up a lot of great ideas, and you'll get a week of the premium videos where the swing trades that I'm talking about, copper, corn, crude, these are all trades that we discuss in that we discussed together in that premium video. All right, gang. I'll talk with you soon. Let's see. 510, Steve? Nice. Now, yeah, the SPY was way tricky, but that Dow was a layup. So super pleased, Steve. All right, gang. Be good to each other. I'll talk with you soon.